Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is a daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A fifth bullish white soldier yesterday, as well as a second bullish long white Mariposa, and a continuing follow-on higher to last Friday's seminal key reversal up. Previously, the market punched up and closed over the upper time, currently at 98.60, the recent June to August bearish shift pitchfork, and its part in the declining short medium moving average, currently 99.10, as well as the significant February to date downtrend, currently at 99.24, giving notice that this was a major reactionary bullish move. Yesterday, the market went further, punching up and closing over the October flat-ish top, currently at 99.73, what is looking like a possible, though by no means certain, ascending triangle, currently at 97.23 to 99.72. The market then rose up through some fairly clear air until it once again maneuvered over parity up to the next resistance, the declining medium moving average, currently at par 10083, par 83, I suppose you could say, where it halted to spend the night. I said yesterday there were now two key features to look for overhead. Firstly, and it sounds obvious, is the key parity level, the big one even number. Not just because of the round number, but because it could also be seen as the flat trend line part of an ascending triangle pattern formed since late September. Personally, I blamed cable, sterling against the US dollar, for this outlook, as I first saw such a similar pattern, but further developed over there, and hence started to look for it over here. Ideally, for this pattern to form, we'd need a rejection or hold at the one even level, but not as far as the 97.5 area, and then for the market to make up its mind on which direction. However, bearing in mind that this is not a science but an art, I caution to be on the lookout for a preemptive move. Well, that's what we may have had. The size of the primary target X on this would therefore be around 103.15 on the upside, with a secondary hard to reach target X1 in the 104 area. The only problem with all this is the ascending triangle is in the wrong place. It should be after a move up, not down. Secondly, yesterday I asked you to start looking at the declining medium moving average, currently at 10083. This was coming down to reinforce the late August and September congestion between 99.5 and 10050, but has been thrown into the melee yesterday as a capping action. Beyond this medium moving average, we have nothing of note until the November 2002 high at 101.70. Okay, so to these two, I'd add a cautionary third point. Now you're adding a cautionary point? Well, yes. If the medium moving averages manages to keep a lid, more or less, on this market, then we could have the beginnings of a possible late September to date bull channel come ascending wedge pattern. It's too early on this as yet, but it's worth bearing in mind, especially as a riposte to the imperfect ascending wedge pattern. So far today, well, not much. Prices pushed over the medium moving average, but only just, and then moved back down below it. There might be potential to look at the last 2 days as a possible tweezer top, but it is early on that. Cable, aka sterling against the US dollar. A second bullish white soldier and the activation of the possible new pattern I spoke about yesterday. You see, I had noted what appears to be an October-based ascending triangle, currently at 111.17 to 115.03, and yesterday's action punched up through the upper flat trend line of this pattern. The base of yesterday's action was on the combination of the October 2016 flash crash low at 114.5 and the declining short medium moving average, currently 114.32. Now, in an ideal ascending triangle pattern, would have seen a halt or a drop off, but only as a maximum down to the 112 area before a definitive move in the next major direction. This being an art rather than a science, I did warn that one should look out for a preemptive move, just in case. Thus, a primary target X on the upside for such a move would be in the 120.20 area, with a harder to reach secondary target X1 in the 122.5 area. The only issue with this pattern is the ascending triangle is in the wrong place. It should appear at the end of a move higher, not at the lows. There are two further things to look for on the top side now. Firstly, the declining medium moving average, currently at 117.34. it may not take that long for the market to move up or the medium moving average to move down to test the market. Secondly, and this is a greater concern, is that the action over October may stall and pull back, and the supposed ascending triangle converts into a bull channel or ascending wedge pattern. On this last point, it's too early to say as yet, but it may be there as an idea, so just watch out. So far today, well, nothing much, just holding around where we closed last night to a little lower right now. There might be potential to look at the last 2 days as a possible tweezer top, but it is early. Euro sterling. A second bearish black crow yesterday, and a follow-on lower to the previous session's immediate countering bearish dark cloud cover pattern type. The most interesting feature here yesterday was the piercing of the combined base support of the rising short medium moving average, currently at 86.70, and the April 2020 low at 86.69. However, the market closed right on these two and not below it. As I said yesterday and the previous days, the rising short medium moving average looked like reasonable support right now, especially on a closing basis. Looking above, we still have some congestion from last week between 86.98 and 87.20, and some recent congestion from early October between 87.69 to 87.80, and then nothing until the 50% Fibonacci line of the March 20 to March 22 move at 88.51. Looking below, well, we have the lower time, currently at 86.26, of the oft-mentioned April to August bullish Andrews pitchfork, and with the flatlining medium moving average below that, currently at 85.95. So far today, a little dip below the combination of the April 20 low and the rising short medium moving average, but not as far as yesterday before a pullback up over both the low and the short medium moving average. US dollar against the Indian rupee. A second bearish black crow yesterday, which is also a bearish closing black Mariposa that followed on from the previous session's counter to the counter bearish engulfing pattern. However, the most important feature was the break and close well below the lower trend line, currently 82.48, with a recent September to date ascending expanding wedge pattern, currently 82.48 to 84.47. The market dropped below the October base support between 82.13 to 82.36 as if it wasn't there, eventually stopping at some light support from late September at 81.90. This was only the one close below the ascending expanding wedge pattern, which is something I normally wouldn't do this, but it was sufficient to start looking at possible targets below. Thus, initial primary potential target X would be in the 80.90 zone, whilst the harder to reach secondary target X1 would be in the 80.28 zone. It's still too early for this pattern, but it's worth looking at. So far today, an immediate countering move back up with a higher opening, a bullish opening white Mariposa so far, but it's also a bullish Harami at the moment, and this is where the weakness is. It's a weaker reactionary pattern so far, not even making up to the broken lower trend line, though we're not far from it. But I will bear in mind that it is bullish right now. US dollar against the Brazilian real. A third bullish white soldier yesterday and a continuing follow-on higher to the recent large immediate countering bullish opening long white Mariposa. Interestingly, for a second time, the market uses as a base the 50% Fibonacci line at 527.37 of the May 20 to April 2022 move, which has earlier been a cap on prices. Below, we have what I have called recently the really heavy forces of the rising medium moving average, currently at 523.76, and the lower time, currently 521.22 of the late May to late August bullish shift pitchfork. They had been breached over last weekend, but the recent move has been a good patch job on the breach. This bullish pitchfork is the current key driver here right now. Looking above, the market halted, unsurprisingly, at the lesser Fibonacci line at 538.13, closing right on it. Further above, we have what might be a stronger resistance at 543.81. US dollar against the Mexican peso. A combined immediate countering, key reversal up and bullish Harami yesterday after the previous session's bearish engulfing pattern and early inverted hammer pattern. Even so, yesterday was a new low for October. The market continues to travel down the outside of the broken upper time, currently at 1982.40, the March to July bearish Andrews pitch walk and towards the middle time, currently 1981.73 of the bearish shift pitch walk for the same move. Yesterday saw the market breach both of these, but also staged a strong recovery back up. This segues nicely into something I had been warning about now for a couple of weeks, and I quote, "Yet I suspect it may still be significant. You see, the reason I've taken pains to highlight these two times these last few weeks is that in about a week's time, actually it's now tomorrow, but I will carry on. In about a week's time, they will cross over, and for those who know me, well, that is when I say look out. Look out for one or more of the following: a change in trend, a reinforcement of an existing trend, and or volatility. These usually lag the crossover by a session or two, but it's worth watching out for what happens on around the 28th of October. You can see the crossover within the red circle on my daily chart." End of quote. So we are on the eve of the crossover, and seeing an immediate countering key reversal up is exactly what I would expect around this crossover. Exactly. There may be more, so watch out. In the bigger picture, the market has continued base building since mid-August, between roughly 1990 and about 2020, with occasional, such as yesterday, forays outside. This is still the picture, with no significant feature developing in either direction, or at least that's what I'd normally say. However, I've started to look at the action since August as possibly having elements of a rounded bottom, which includes that rising bump from 3 weeks ago, even if altogether it is not such a great looking pattern. So far today, a move up to the flatlining short medium moving average, currently at 20.0215, but then back off and suspiciously looking like a possible shooting star pattern type. Well, we'll find out now. A shooting star pattern right now. I'm so wary of this crossover and what it may happen. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.